When talking about Bitcoin and its trajectory, it doesn't matter if it's Trump or Kamala. And I first want to say in this video, I'm not going to get political. The only thing political I will say is you need to go vote. Everybody should go vote. Everybody's going to vote for who they believe is best for them and their family in this country, and that's it. Beyond that, in this video, we're going to talk about the technicals and what the charts are telling us, not what emotions and promises and so on and so forth. We're going to look at the facts and the charts and what they're telling us, not what the news is telling us, and not basing it on who's going to win and who's not going to win, so on and so forth. If you want to be a trader, you need to take emotions out of it. You almost need to be emotionless if you want to be successful. When there's legit news on a company, of course. But in my opinion, whether one or the other gets elected, it doesn't make a difference to Bitcoin. Yes, I understand one side of the coin is saying more bullish things about Bitcoin. But the thing you need to know about politicians is they lie. And they'll say whatever they need to say to get in the office. And that's not leaning one way or the other. That's just all politicians. And the sooner you realize that, the better your life will be and the more informed decision you'll make. So, now that that's out of the way, again, I'm not getting political, and please don't get political in the comments. It's just everybody's gonna vote for who they're gonna vote for. Everybody should get out there and vote. It's your right as an American if you live in the United States. So just do that, and let's all agree to let each other vote how they're gonna vote. Right? That's all our rights. So, in this video, we're gonna be looking at the facts and the charts. We're gonna look at a couple of things. First thing we're going to look at is my high five setup. Bitcoin is a high five setup. If you are new here, what a high five setup is essentially a charting pattern of some sort, a volume profile shelf and gap, a bullish MACD, an uptrending MACD, a uptrending RSI, and an uptrending trend. When you get these 5 key pillars, you have a high five setup. When you get these 5 key pillars in the opposite direction, you have a low five setup. Super simple. Next, we're going to be talking about what has happened in the past. We need to understand what happened in the past when Bitcoin got to its top and fell, and when Bitcoin got to its bottom and rose higher. We need to understand the past to understand what's going to happen in the future. And like I always say, the more probabilities you have pointing in one direction, the more likelihood is you're going to have what you want happen, essentially. So if you want the stock to go up and you have more probabilities going your way, it's more likely to happen. So again, we're going to first talk about the high five setup. Then we're going to be talking about the past. And then stay tuned to the end of the video because I'm actually going to show you the actual trade setup that I would make in this name, either on iBit or on Bitcoin. Now, it just depends on your brokerage and everything. If you have access to buy Bitcoin, if not, you can buy iBit. And I'm giving you both these options. That way, I cover everybody because I know not everybody can buy Bitcoin, doesn't have a Bitcoin or like a crypto account. And obviously, if you don't, then you could buy iBit in your normal brokerage or Robinhood or, Fidelity or whatever. Okay. So stick around to the end of the video because I'm going to show you the exact trade setup that I would make if this name goes in the direction that I think it's going to go in based on the probabilities. So first things first, we have a cup and handle. You see it clear as day on your screen. We have a cup and we have a handle. We have not broken out of this handle. Sorry, we have not broken out of this resistance area to essentially have a breakout of the handle and cup, the cup and handle breakout to the upside. But we are getting extremely close. And I know Bitcoin is down today in the last 2 days, probably about 6 to 8%, somewhere in that range. They're down 6 to 8% from them hitting this top. And everybody thinks it's going to be the same thing as when it hit this top back here in March. And then we had this big pullback all the way down to 50,000 or 65,000 or whatever, right? Well, what do we also have going our way? Well, we have this nice little volume shelf over here. We have this volume shelf from about $68,000 down to about $66,000. And you can even come down a little bit further down to 65,000. If we did get a, pullback down here, I'd be okay with that as well. As if you zoom in here, you have your 9 EMA sitting right here at the bottom of this path. So either way, about 68 to 65,000 is kind of your buffer zone for a bounce and then continuation higher towards a breakout. Now, I will caveat, again, not getting political, but I will caveat that a lot of people are bullish on Bitcoin more so with one candidate than the other. And if that candidate were to win, you would definitely have a way easier explosion to the upside and just bust out through this cup and handle pattern. If the other one, I still think we have it. I still think we get the breakout. It just might not happen right away because people might be like, "Oh my God, what's happening? Oh my God," for like the first week. But if you've been around long enough, you understand that things happen in the news and people quickly forget about them. Usually in a day, sometimes a week. The bigger stuff, usually like a month. But people usually forget and move on with their lives. So we have our charting pattern. I'll also tell you we have this bull flag charting pattern on IBIT. And I will say we have the bull flag on the Bitcoin chart here as well. I just didn't want to draw it on here because it would make it very cluttered and a lot of lines and not as easy to read. So we have a bull flag from a bottom of $21.68 up to $42.05 on the IBIT, which is the Bitcoin ETF. We had a consolidation within the bull flag. We had this breakout up to $42, and now we are having this in-week pullback back down to where we broke out of the bull flag. If we hold this breakout and at this nice little volume shelf here, and we bounce higher, that is very bullish for this name. And that means that with it happening over here on Bitcoin as well, that means we have a even stronger possibility of breaking out this cup and handle pattern. Because over 65% of breakouts on bull flags are successful. So right off the bat, we have a 67% going into a breakout of a cup and handle as well. Next, we have a volume shelf and a volume gap. Then we move down here into our indicators. So we have our MACD that is cross bullish, MACD over the signal line. MACD is the blue line, signal line is the orange line. A bullish cross. Not only that, but if we zoom in here, we had this downtrend on the MACD, and we have broken over and out of that as well with climbing volume here. Very bullish. Next, we have our RSI. On our RSI, we have higher lows forming. We have RSI purple line over our RSI moving average yellow line in a bullish uptrend. Not only that, we also had a downtrend on our RSI as well, along with our MACD, and both are breaking out of that downtrend to the upside. Last, on our high 5 setup, we have the trend continuing higher through the sweet spot. And again, as you can see, we had a downtrend on our stochastic, and now we are breaking out. So on all the indicators, we are uptrending, making higher lows, and breaking out of a channel downtrend. Now you understand, if you didn't already, why the high five setup is so good, because it takes all these probabilities and gives you the best possibility of nailing your trade. So we will get into the history now of Bitcoin, looking back, seeing what's happened in the past to now know what's going to happen here in the future. Remember, this is on a weekly chart, so these moves happen over time. Each candle is 1 week. It's 1 full week. So this is going to play out over months and years, not days, weeks. So we'll come back here and we'll talk about our trade once we look at the history, and we'll talk about the measured move and the price targets after we talk about the history first. So first history lesson we're going to get into here is going to be back here in, okay, I'll just redraw it. Back here in 2020 to 2021. Let me change this to green. It's fine, because I'm going to draw this one in red right here. So we have we have bullish uptrend back in 2020 to 2021, and here in history we had a downtrend from 2022 to beginning of 2023. I'm OCD, guys. I got to change it. Got to look pretty. So we had a 446% move on Bitcoin from end of 2020 to the beginning of 2021. Now, how could we have known that this was going to top here and pull back basically over 200 and some percent? How would we have known that, hey, we ran up 446%. Now it's time to probably get out of this name and re-enter lower, or exit the trade, or take profits for the majority of it, X, Y, or Z, right? How would we have known? Well, I'll tell you. So if you're not new to my videos, you know that I use every indicator in my toolbox to tell me where we are going, when we are going to bottom, when we are going to top, and it is hitting at a high success rate. If you look back at my post, I've been calling a lot of tops and bottoms, and it's because of this strategy. So we'll go one by one. First, we're going to talk about the Williams-R percentage. The Williams-R percentage is essentially going to have we'll pull it up here bigger. Every stock, you could pull up a Williams-R percentage, and first thing you should do is come up here and draw a red line across the top to where it's touched multiple times, but at the highest point, and draw a green line at the bottom for where it's touched the bottom multiple times and at the lowest point. So here at about negative 98.38. And we can see in here that we go down to the bottom and we go up to the top, and we kind of do this dance back and forth, right? Well, in this dance with the Williams-R, which is such a key indicator, and it is one of my favorites, obviously, is why I use it. In this dance, it will show you, not to 100% certainty, it'll show you when we are going to bottom and when we are going to top, and we are able to add other indicators and other things we know about whatever equity or crypto or whatever to give us a higher probability of being right. So, just like your stochastic, when you cross up above this sweet spot and you go up here, you can move sideways while continuing higher on the stock. I drew these lines straight down so you can see when we started this box here, we were at this bottom in Bitcoin of around $10,000 to $11,000. During this sideways move on the Williams-R, we climbed all the way up to a peak of over $58,000, over 5x, 4x, 4 to 5x, so 446%, right? So as you can see, we climbed higher. Well, we then went sideways and bottomed out. What was the Williams R telling us when we were doing that? Let's collapse this a little. So we had this consolidation here. What was the Williams R telling us during this time? Well, I'll tell you. It had this peak and it hit this top red line. Then it had this lower high followed by another lower high or a double top and then a fall from grace. When we got this fall from grace down here, what happened to the stock? We fell over 200%. So you cannot just look at this, though. You cannot just look at the Williams R and say, oh, well, if this happens, then I'll do this. The biggest thing you need to know first and foremost is what the Williams R is that when you go up here and you get when you're uptrending, you go up, you get this pullback. You get this pullback right here. I'll extend this. This pullback right here. When you get that, you are going to make your box to the bottom of that pullback. So that is basically the support that you created on your Williams R. Then, vice versa, you are going to draw it to the top. And this is the thing, with the top, you can keep extending it. The top doesn't matter as much as the bottom. Okay. So you had it here and then you extended it up to here. And the biggest thing is when you enter this trade, for just looking at the Williams R, you will exit if it breaks this support that it created right here. Sorry. If it breaks this support right here, you exit. It broke the support right here. And where was the chart? Well, the chart was right here in the consolidation pattern still. And you would have still made over 340% on your position. If you wouldn't have exited and saw this rebound that we had here, right? You saw this rebound that we had and said, oh, we're good. We're rebounding. It's okay. I know we broke out of this box, but I'm not going to follow the rules or a strategy. I'm just going to go with my gut. Well, you see where that would have got you. It would have got you losing over half your gains. And then you might have got emotional and then wrote it all the way down here and then said, oh, it'll go back up. And then you waited basically a year for this thing to go back up. So you have to follow a strategy. Now, this is just one indicator showing us what could happen. Let's also look at the other indicators to get more conviction on what we should have done with this name. And you could have got out earlier than whenever you broke out of this box down here in April 2021. You could have got out even earlier than that and kept more of your gains. That is why you look at that's why you use all the tools in your toolbox, not just one. So we had this run up, like I said, we went sideways on the Williams R. Next, we're going to look at the MACD. What was the MACD doing during this time? Well, it was running up higher and higher and higher. And then it consolidated up here and it told you again, right here, it told you, hey, you are breaking down. You should probably exit the name or take profits. This is the weekly. It takes a lot to move these indicators. So here again, you would have lost about, by the time it happened, you would have lost even more of your gains with the MACD if you would have waited for that. Now let me tell you what you should actually be looking at. A little bit more than the MACD. Like I said, you still look at all of them, but you want to look at some things more than the others. So Williams R is the most important. I would say second most important is going to be your RSI. When you get into this overbought area, above the 70 line, you want to start taking profits. Lock in some profits. Do it for yourself. Okay? So you're climbing higher and you just kind of have your price points and you lock in profits, running into these filling these volume gaps on the volume profile and then locking in profits there, right? Because you'll have these pullbacks and you can re-enter if everything still looks rosy or whatever you're going to do with the trade setup. But what you really want to look for is, again, when you break over the 70 line, you want to draw a box to the peak and down to the 70 line. The 70 line is this dotted line right here. I know I also have a dotted line, but you can kind of see where it's at. So if we zoom in here, we had this breakdown of the 70 line right here. Where was that at? Oh, look at that. It's right here on the first engulfing red candlestick. Our first engulfing red candlestick before our Williams R told us to exit, before our MACD told us to exit, our RSI told us to exit, while sequentially you had the Williams R coming down to this bottom. So you could have took that and said, hey, it's time to exit. I'm crossing back down under 70. This thing's going to pull back a little bit. I'm going to lock in my profits, and you would have held over 300% of your profits. So we had the RSI front running and telling us sooner when to get out. I always say 2 or more of these indicators, taking out of the Williams R, MACD, RSI, and your stochastic, your trend, if 2 or more of them tell you to exit, you just exit the trade. If it runs up, if it was a false breakdown, so be it. You lock in your gains, because if you don't, you might get emotional. You might lose a lot of your gains, so on and so forth. There's so many stocks, there's so many cryptocurrencies out there. Don't get so locked in that you forget to pay yourself. Okay. So last thing we're going to talk about on this little area in here, this little timeline, is going to be the stochastic. The stochastic came up and then went sideways during this time period. It fell down right here, which this right here is a bearish indicator. Not only you had red through yellow, which is fine because it can stay up here and go sideways, but it's very bullish if you break back down below this 80 line. If you break that back down below the 80 line, it is bearish and you will most likely want to exit the trade. But let's see what was happening at that time. So at that time, we just had a dip down lower and a small break of the 80 line, while we just had this little pullback. Now, again, I said 2 or more. So only the trend was telling you to exit. So you could have said, okay, only the trend's telling me to exit. The RSI isn't telling me to exit. The MACD isn't telling me to exit. And the Williams R is not broken down below my box that I made from the first low. So I might trim a little bit of my position in anticipation of it happening the next week or two, but you should not exit. Like I said, 2 or more. With this one, when it was finally time to exit, what did we have? When it was finally time to exit, we had RSI going down. We had the Williams R breaking out of the box, and we had the stochastic breaking downward. That should have been your signal to fully exit this trade. So now that we got that done, we will go into the bottoming out. So that's how you find a bottoming out, or sorry, that's how you find a topping, and you can call tops like I've been doing. And this is going to be how you find bottoms. So to find a bottom, you want to first look at your Williams R. So again, we fell, we had a pullback, and we had a consolidation sideways. And in this channel, while we were going sideways, we continued lower. And I'll just tell you something right now. I drew this box like this. If you go like this and say, okay, here's my support, or here's my resistance that I created for myself on the downtrend. If I break that, I sell out. Well, you broke it right here. I hate when it doesn't do it. You broke that right here on 18 July. And when you're in there, you were sideways for the rest of the time. So I actually wouldn't even take this whole box. I would drag it back to here and say, hey, because look, 62% down basically, 59% down, and you got your capital out. So you missed on 4K, but you followed the trend, and you followed the indicators, and you got out when you were supposed to. So I'll actually pull that box back to here to really show you. So you had the downtrend, you had a cross bearish below the zero line, MACD through the signal line on a downtrend. Also, you had a cross down RSI line through the yellow RSI moving average, and then a sideways move here. And you had your high here. And look at this. Same thing. You had a breakout higher than your resistance point that you created. I'll zoom in on this. So again, you go like this. The first resistance point snap back up we created was right here. So we broke that right there. So when you break it, you sell. Where were we when we broke out of this? We were right here. So basically the same time frame as the Williams R. The MACD was curling up, and the RSI was telling you, hey, it's probably time to exit this trade. And you had red over yellow, which is bullish, but remember, this is going down, so this tells us we should exit. So this is how you kind of find a bottom, like this. But like I said, if you were to enter this coming down, you don't want to enter into this until you have the indicators going your way in an uptrend. RSI uptrending, making higher highs. MACD crossing upwards bullish. Your trend crossing upward bullish, and you making higher highs in your Williams R. So, and yes, I know this took a while, right? This took a while for this to actually bottom, but you just kind of consolidated here, and then you made this move higher. So you had everything going your way. You wouldn't have exited at a loss because it just went sideways basically. And by the time your stuff went against you, your indicators, you would have exited and been slightly down or slightly up. So it wouldn't have been anything crazy. And that's why you can get in and get out of trades. So that's the history of it. So you see how the high five and low five setups worked in the past at calling tops and calling bottoms. Now, like I already showed you, we have a high five setup. We have a cup and handle pattern about to break out, a volume shelf with a volume gap, a bullish MACD, a bullish RSI, and a bullish stochastic, all breaking out of downtrends as well. On top of that, you have a bull flag on your IBIT, which you also have the bull flag on your Bitcoin chart. Like I said, I just don't want to crowd it. On top of that, you have this pullback right here. You had this run up. You had this run up, and now you're having this pullback right here. Also at this volume shelf. Also, your if you do break down your 9 EMAs right here, but you'll exit before that. Or you can put your, which I'll show you, you could put your stop loss right underneath this. Because basically at that point, you didn't hold the bull flag and you didn't hold the 9 EMA and you're under the volume shelf, it's time to exit. So the trade setup, we'll get rid of everything else. And just know with the trade setup, we have price targets, right? And we have our measured moves. But you should always be looking at these indicators. You should always be looking at the Williams R. You should always be looking at your MACD, your RSI, your stochastic. And again, if two or more go against you, you sell. It is that simple. It doesn't seem that simple in the beginning, but I promise you, when you do it as long as I've been doing it and have immense confidence in this strategy like I do, you're gonna get it and have that confidence, and you're gonna understand when to enter, when to exit, when to trade, when not to trade. So first things first, I'll just show you the setup. So can we already draw our box up here? Yes, we can. We had our first pullback right there. We had our first pullback on the Williams R at about 34.15. So we already have our baseline here of 34.15, and that goes basically a little right below, that goes about 59,460, I would say at the low. So about 60,000. So we already got our box form there. We can form our box on our stochastic, or form it right here. I'm just going to draw it up here. And again, if we break down below this, along with other things, it might be time to exit. But I'll just say this. I'm waiting for this retest on the bull flag. I'm watching bull flag before I watch cup and handle, because we will not break out of the cup and handle until we break out of the bull flag. And again, the bull flag's right here, in case you're wondering. It's like this. Your sorry, that's terrible. Your bull flag's right here. Same point of a bounce. So if we bounce off this, I'm probably going to enter a position. So before I tell you the trade, first thing we have to do is measure our moves. So we go from the bottom here to the top of our cup and handle, which is 53,540 bars. So 53,540 bars. We pull up a price target, take off the magnet, a breakout right there, 53,540. We'll take that. So we're about 129,000. Right? No, we'll just call it 128,000. Right up here. So 60 to over 70% move here. So yeah, over 70% move if we break out this cup and handle, and your move on your bull flag is going to be down here up to there. It's going to be 2005. So we have a move up to $59.43, or we can come over here. The bar is 2006. Measure it down here. Bottom of the bull flag to the top, 48,974. We draw this breakout as well. 48,904. Call it right there, 123,000. So basically the same area here. I might go here actually. So 35,105. Boom. So that's how you get your price targets, right? So your first price target is going to be basically 110,000 for a 50, almost 47% move, and then 128,000, 129,000, somewhere in between there for over a 71% move. On top of that, yeah, that's good. So for the trade, you are going to want to, like I said, this is a bull flag. It's retesting the bull flag. So I wouldn't be opposed to, once we get a retest on, so we're retesting that bull flag now. Once we retest this bull flag and we bounce, I would not be opposed to enter this name, because then we are moving with a bull flag movement, measured move up to 109,000, while also heading right towards the iceberg to break out of the cup and handle pattern. So if we get this retest, which we are now, and we get a bounce starting Monday and this next week coming up, if we get a bounce, I am entering this name at, let's just call it, so let's zoom in here a little bit. So what I do to enter a name is I either look to engulf the prior resistance. So this week's candle would have been $73,624.98. So let's just call it $73,625. I will enter this position. So let's see, 74,625. I will enter this position. Or I'll say I'll increase the position, honestly, because like I said, I'm gonna get in on this after this bounces. So we'll just take this. You had these peaks right here at about 70,000. So I'll just do a break over 70,000 after we have a bounce higher. So let's just say 70,097 is going to be my entry point. $70,097 is going to be my entry point closer to the end of next week, as I want to make sure the breakout or the retest and confirmation higher bounce is going to stick. I would put a price. I would put a stop loss prop for me. I'd probably put it. Let's see what the risk reward is going to be on the first price target. So yeah, I'm gonna go. Yeah, right there. I'm gonna go for a 5-to-1 risk to reward. Getting a 5-to-1 risk to reward is very, very favorable. A lot of people trade 1-to-1 risk to rewards or 2-to-1 risk to rewards, and so getting a 5-to-1 risk to reward is obviously very, very, very nice. So the entry price is $70,000, basically over $70,000. The closer you get towards the end of the week, the better. And the confirmation, your first price target is $109,000 and $109,700 first price target, with your stop loss at $62,227. So risking 11.23% loss for a 56.62% gain just on your first profit target. Like I said, the second profit target is over 71% higher at $128,298. So very, very attractive risk reward for understanding that you have a bull flag retest right now. And if we get a bounce off of that, then you're also more likely going to get a breakout of your cup and handle, and all high five indicators are pointing your way, like we already talked about. And history is pointing your way, telling you that we are not topping right now. We are not topping right now because we are breaking out of these downtrends to the upside. We are on the lower side. Look back and look when we had our last high in Bitcoin. We were all the way up here on the MACD. Now we are way closer to the zero line. Same thing with the RSI. We were way overbought last time when we were all the way up here on our previous all-time high on Bitcoin. Now we're basically at like 8 points above the 50 line. And even on your stochastic, your trend, we were all the way up here when we were hitting all-time highs. Now we're barely breaking over the 80 line. So we were at 97 line. Now we're just breaking over the 80 line. So again, everything is pointing in one direction, higher. And the charts aren't telling me, hey, if this president wins, this happens. If that president wins, this happens. The chart's not telling me that. The chart is telling me We have a cup and handle pattern we're about to break out of. We have a bull flag pattern we're about to break out of. And guess what? You got a high five setup, and history tells us that we are going to go higher based on the high five setup, and that we are also not topping out. So you tell me. And hey, holy moly, this is a 40-minute video, but I think I just dropped a ton of wisdom on you. I think I just gave you a lot of gems, and I think I broke down Bitcoin into a million different pieces and a million different coins, it feels like. But I think I just, I'm very thorough. So if you made it to the end of the video, kudos on you. You're looking to be better. You're looking to be a better trader. You're looking to just be better and make more money and be profitable, because everything I said in this video was not fluff. It's all meaningful. The high five setup is meaningful. The history is meaningful. And how you trade it is meaningful. All three things I talked about today at length are all meaningful. So if you made it to the end of the video, one, I really appreciate your support. I really appreciate you taking the time out of your day to watch this and support me, but also support yourself. Also support yourself in becoming a better trader or investor, right? I said all this stuff, and if you're not even trading this name and you just want to know what the charts are telling you for you holding Bitcoin since $500 or since $3,000 or since $10,000, and you just want to know and have that conviction, like, hey, should I take a little bit off the table and go buy that nice car or boat that I wanted with all that Bitcoin? Or am I safe? Am I good? And the charts are telling me that we are good and we're going to go higher. All I want to see again before I enter a trade is a confirmation bounce off of this bull flag that we made. As long as we don't break down below this, I'm good with this trade. As long as we bounce, move a little higher, get that confirmation, I will enter this trade and I will be stoked about it, because you have these massive moves inbound. So again, I appreciate your support. I appreciate everybody that made it to the end of this video. I know it was a very long one, but I wanted to be thorough. Show some love, drop a like, share this with people you know that are into crypto or Bitcoin or whatever, or that are freaking out right now because they don't know who's going to win the election and what's going to happen with Bitcoin. The charts are telling us what's going to happen with Bitcoin, and the charts are telling us that as long as we get this rebound off of the bull flag that we formed, we are going to go higher and we are going to make a lot of money on the upside. So thank you all. Hope you guys enjoy your Sunday, whether you're watching football, whether you're spending time with the family, whatever it is. I really appreciate it, and have a great day.